Okay, so sort of starting midway through our deck, as a company, we're a nature-based carbon credit company. We're focused on developing what we call nature-based solutions. So projects which remove carbon from the atmosphere through anything from mangrove restoration to protection to forest carbon projects. We're heavily involved in what's called ARR, which is restoration of forest project areas in countries around the world. This is one of the most high value carbon credit sources at the moment, one of the more challenging areas to work in, but we've had really strong success in developing these projects. Unlike anyone else really working in the space, certainly in the public markets, we're an owner operator of these projects. We're not a streaming company or a sort of passive investor. We've taken direct ownership or quasi ownership positions in these projects through long-term leases. So for us, it's important that we have that direct ownership and control over the project sites. That gives us an asset base, and we own up to 100% of the rights to those projects, depending on the jurisdiction we're in. The development pipeline is actually now up to closer to over the full lifespan of the projects, close to 44 million tons of credits, and the higher end it's close to 60 million tons of credits. And we're adding significant amounts of new potential pretty much month to month as we expand our project sites. In terms of the investment criteria for these projects, we typically want to see at least 500,000 tons a year of credit production from 20,000 hectares. We look at reforestation, avoided deforestation, blue carbon projects, and what we found from our customers, and what's very important to us, is looking at co-benefits associated with these projects. So in Sierra Leone, where we're doing tree planting, we're having a huge impact on household incomes from land that has very limited value at the moment. We're providing employment to over 2,000 tree planters over the course of the summer. We're looking at how we can use the community benefit sharing to improve access to healthcare and education within these regions. And that's important to us. It's also important to our clients, who think that recognize that investment in carbon resilience and climate resilience is the way that you also pull some of these communities out of long-term structural poverty. We've got an operating team in each of the jurisdictions where we're active. So we have a team led by Kev Godlington in Sierra Leone, who's been there for 15 years, operating sustainable palm oil production and forestry projects. We have a team in Guyana that operates our Guyanese and Suriname operations, that runs our coconut water plantation and restoration projects. We've got an active team in the state of Yucatan, where we work very closely with the university and the office of the governor of Yucatan. Again, sort of move fairly quickly into the economics of these projects and why we think we can be successful as a public company in this space. The first sort of 4 stages of a project, the first involves kind of at-risk exploration, site development, where we'll have a team on the ground doing sampling and ultimately going through the process of quantifying the total reserves, developing what's called a project development document. And that's a bit like a reserve statement in the mine, oil and gas sector. And those expenditures are around $1 million for us to get to that stage, sometimes lower. And then we also lock up the land rights and ownership in those through leaseholder agreements or partnership agreements with the government. So in the case of Sierra Leone, we spent about $2 million in the country to get to the stage where we'll produce, over the lifetime of that project, tens of millions of tons of credits. I'll give you some indication of what we think the revenue scenarios will look like. What we found in the market in the last year is that the big buyers of carbon credits, the companies that have net zero liabilities on their books, are so desperate for production, they're so undersupplied at the moment, that they'll invest through a pre-purchase agreement. In the case of Sierra Leone, we're looking at currently, and this has already been announced, a pre-purchase agreement of $2.5 million. That actually covers most of the rest of our capex into the project. And for the balance of the project's lifetime, we're generating anywhere from 500,000 to 2 to 3 million tons of credits per year. from that project. So if we want to just focus on the economics of our business model, we're investing roughly $2 million up front. Our pre-purchase agreements cover the capex on the project, and we generate about $460 million of cumulative revenue at prevailing climate carbon prices over the lifespan of the project. So our use of capital and the value that we create for our customers over 30 years is extremely efficient too. In terms of our main projects, the current project status, we've announced Sierra Leone Part 1 and 2. So that's a total of 57,000 hectares in the advanced feasibility stage. In fact, in Sierra Leone 1, we planted 400 hectares last season, and we'll plant a further 800 hectares this season, minimum, potentially up to 1,000 hectares. We have a further 32,000 hectares of land in Sierra Leone in a different chiefdom. And then we've been working since last September on mangroves, both restoration and conservation of mangroves in the Scarcity estuary. We have a team in the field this week doing extensive field work, looking at really how much carbon is stored in the sediments, characterizing the biomass within this ecosystem, ultimately quantifying how many tons of credits. And we expect from our conservation project that there could be up to 1.2 million tons of credits in the first 2 to 3 years of that project as we conserve it from degradation. And then in Yucatan, we started out looking at 5,000 hectares. We're now up to about 25,000 hectares of conservation potential within a 100,000 hectare mangrove reserve that the state is assuming responsibility for, with the direct partners, commercial partners to the state. So as we establish that state conservancy, we fund all of the costs of that conservation area and develop it through to completion. We think we're pretty uniquely positioned within the market. We keep a close eye on some of the other groups within the space. Most of the companies operating in the space are private. Many of them are limited funds, so 8 to 10-year funds. We happen to think that that's a difficult model for carbon when you're developing 20 to 30-year projects where the returns are not in the early years of those projects. It takes 4 or 5 years before you get production. So we think a permanent capital structure is the right way to go with this. Carbon streamers have tried to deploy capital into projects, and the challenge for them is that the sellers and developers of carbon projects would much rather sell to a large corporate or a large fund than an intermediary. And the buyers of carbon credits, whether that's the oil and gas companies or Trafigura or Mercuria or Macquarie or any of the other groups that we've been talking to, they want direct control over the production process for the project. So they want a higher level of scrutiny than we think that streamers and other intermediaries can provide. So the other nature-based listed developers, DGB in Europe, and then Austrian Climate Solutions, which is primarily a sort of consulting level business for supporting carbon credit development. So we think we're pretty unique as an owner operator of these projects. In terms of the Sierra Leone announcement we made a couple of weeks ago, we've as I said, planted within that project site. We've got lots of activity in country going on at the moment. We've got a large nursery that will deploy seedlings from over the summer. The pre-purchase agreement we announced, as I said, in return for the pre-purchase investment into the company, we pay the buyer back in tons. We initially listed and sold or took an auction process for 5,000 hectares, but they want the rights to develop up to 25,000 hectares. That pre-purchase contribution covers most of the capex, and it gives them a 20-year offtake agreement with a 10-year extension right. And then that we repay them with the initial tons, and then they have a right to purchase the balance of the tons at an index-linked price within the market. So we're not selling the project early, we're not selling it off. We're actually giving ourselves exposure to higher future carbon prices over the lifespan of the project. I'm very careful to talk about our assumptions behind these projects. These are long-dated projects. They're 20 to 30 years. We control the capex in the first 4 to 5 years into project restoration, but we rely on a lot of third parties to validate our assumptions behind the data. So best available information at the moment is from satellite data, from ground-based data on how much carbon is in there. We use third-party validation verification frameworks from Vera, and then we rely on our technical teams at Ecosecurities and Sylvestrum to give us the best available data and scientific assumptions about the projects. Our projections for our revenues from Pomeroon Holding Company have been validated as recently as June 2022 by Beetle Capital. And then our pricing assumptions are based on third-party reports, but also based on the kind of bidding that we're seeing through the competitive tendering process that we ran. So, we have a high level of confidence that our assumptions are the best in the market at the moment. But I always have to caution people that, these are long-dated investments, and things can go better, things can go worse. We do believe that, once you've planted trees and got them to maturity, a lot of that risk is removed. So these assumptions are based on, these projections are based on scenarios that assume the mid-range of average price of $20 a ton. It gives you a sense of the cumulative carbon revenue at the project level NPV, and the project IRR. If you understand, if you know what NPVs are, we're using an 8% discount rate. So that's $760 million of cumulative revenue over 30-year lifespan of the project. Because of a high discount rate, the NPV looks much lower. So we tend to focus on project IRR and cumulative carbon revenue. The second project, the Sierra Leone restoration project, similar kind of scale, similar kinds of cumulative revenues. Our mangrove projects in the early stages, a smaller area which we expect to see expand, $174 million of cumulative revenue if our assumptions hold on that project. And then with Yucatan, also very large area, expanding now to 25,000 hectares, but this is based on the 10,000 hectare assumptions. So, total, including our Guyanese forestry project, the project NPV for this one has been validated by Beetle Capital. We've been in the country for 4 years. We've got operations underway and revenue starting to emerge from that project. And our Guyanese operations are the base for our new projects in Suriname. Suriname is the country immediately to the south of Guyana, has huge mangrove areas on the coastline. We've had a team in the field for the last few weeks characterizing methane leakage, which we think we can reverse from the from these mangrove areas. So the potential over the next 12 months to run a really interesting project there, reversing methane leakage from these mangrove areas and ultimately supporting that long-term protection from sea level rise and degradation. So very early stages with that project. We know that the sort of area project IRRs are our sort of target IRRs, not based on projections, but we have announced the agreement with the Office of the President of Suriname, and we think there's very, very high potential within that country. So, total project production at the moment, somewhere between 45 and 60 million tons of production, somewhere between $1.5 and $2 billion of cumulative revenue over the lifespan of the project. Total project NPVs, if you add them all up at the project level, somewhere around 100 million of NPV at a discounted rate, and typically showing project IRRs between 15 and 20% for our project. So, as a company that's got this far in less than 12 months, we think, my sales pitch to people is we're a very efficient user of capital. We have a very small core team of asset, or really operate as an asset manager. We outsource a lot of our consulting and technical services. We manage the projects through partnerships on the ground, but we ultimately have very strong ownership in all the carbon rights associated with these project areas, and that gives us a foundation for both very efficient use of capital, but also for very strong high levels of control over the production of these projects. So I'm going to pause there and stop the share. I think in terms of our upcoming milestones, which were released in the technical update at the end of last week, we've announced the term sheet with a large buyer. We'll be able to say a bit more about who that buyer is within the next couple of weeks. We're expanding our project jurisdiction in Yucatan to include an engagement with the federal government, and we'll complete the greenhouse gas audit work on that project within the next few weeks as well. Within Sierra Leone, we've got a team in the field for 3 weeks looking at the mangrove sites, and we'll have a draft PDD in Q3 for that project. And then we'll be actively planting up to 1,000 hectares in Sierra Leone in Q3, and doubling down really on that effort within Sierra Leone. So lots of things going on, lots of things happening. Really exciting time for the company to have gone from being a developer to getting our first trade done, and ultimately looking forward to being able to talk to the market about the full details of that trade and what we think it means for our revenues. But as an early stage company, it was important for us to show not just that we could find carbon credit projects, which lots of people have done, but also sort of deal with the whole value chain down to large Fortune 100 companies and commodities traders that are lining up to buy the project. And when I explained the sort of validation that we've got from the last 3 or 4 months, we had 16 different groups in the data room, ranging from literally the largest commodity traders in the world, Mercuria and Vitol, and most recently some of the other larger commodity traders, all the way through to some of the largest corporate buyers of carbon credits in the world from the resource sector and technology sector. And they've done due diligence on our data room, and they think our data is extremely high quality, and are happy to present term sheets against that. For us, that was the biggest validation that what we're doing is grounded in science, has the right balance in terms of social benefits for the project, but also can generate returns at the project level of IRRs of 15 to 20%, which is what we think the market needs to be compensated for risk within this space. So I'll pause there and open up to questions.
Yes, and I just want to let everyone know, feel free to put any questions that you have in the chat, um, and I can address those. I'm just going to go through a few of these that we've gotten via email, James. And just a reminder for everyone to put themselves on mute. That would be helpful. So we've got some questions that we fielded through email. What does Klimat X offer? This is interesting. That sets you ahead of the competition. Who are the biggest competitors? Obviously, we've got, you've been on the world stage a little bit in terms of delivering keynote talks lately in London, recently at a family office event. There's a lot of inquiries coming from the investors that are looking at Klimat X. So can you give us maybe 3 things that set Klimat X apart, and why investors should be asking their advisors to take a look at the carbon credit space?
Yes, I mean, the first differentiator is we are, as an owner-operator of companies with direct exposure to the full scope of revenues from a project. None of the other listed companies really have that degree of exposure to the underlying assets themselves. We capture, close to 100% of the revenues in most of our projects. We have community sharing and benefit sharing and employment agreements, but we're really an owner-operator in that space. For our clients, that level of quality control is really important to them in terms of their willingness to invest. I would say we're one of the most experienced teams, both in emerging markets, but also in carbon projects. And this jurisdictional approach, which we pioneered, gets away from the very sort of artisanal nature of the carbon business, where companies would build a small business around a single project site of a few thousand hectares, and then ultimately try and get consent and approval for the government to consent and approval from the government to develop the project through. We do it the other way around. We go into jurisdictions where we know that there's going to be carbon projects. We recognize if we're deploying capital at scale, the government wants to be a partner right from the beginning. So we develop those partnerships in advance, and then we clarify revenue sharing and our commitments, and then we do the project development work with landowners and communities, and the government as our partner. And again, this was really taking the model from the resource sector, where we've seen companies secure concessions or subsurface rights first before they do development work. We're just doing that same model, but except for carbon credits, and that makes us, I think that makes us quite different. We're a very lean team. We haven't built 25, 30 person team in advance of having projects. We're very much about proof of concept, securing the first trades, and then building out the base of the business on the back of that. So I think all of those are about being kind of agile, but very focused on quality. Eric, you had a question?
I think there's one. Yeah. Oh, there you go. I think you have to unmute him, but I have another one here. James, how is the
Oh,
pre-purchase
while we're
amount?
figuring that out, I'll answer a question.
Oh, okay.
Yeah, I'll answer Jason's question on the chat quickly while Eric's coming
Sure.
off mute. Yeah, so the pre-purchase amount, there's a $2.5 million pre-purchase contribution on the first 5,000 hectares. As we move to 25,000 hectares, that amount would increase. The pre-purchase amount is based on our equity contribution to the project to date. So we've spent over $2 million. The buyer wants to see us with skin in the game and equity, so they look for us to have sort of 30 to 40% of the equity in hand, and so they're covering the balance of it. It's like a real estate financing in some ways. So we repay them. We can't disclose the price we pay them at, but it's between $10 and $20 a ton. So we receive those funds up front. We repay them until the $2.5 million is repaid with credits that we're producing. So the money hits our balance sheet in advance. There's a liability of tons that we have to deliver to repay it, and we deliver that at an index-linked price for the balance of it. Question from Stoyan: how does revenue sharing protocol and who are the stakeholders that you include in that process? We take a really comprehensive view of our ESG responsibilities. So we look at a benefit sharing agreement to the community, which is typically 10 to 20% of the project value. But we also recognize for restoration project, in the early years, we're providing employment to 2,000 to 3,000 people within the community. We're buying resources in local markets, buying seedlings. We are making investments in infrastructure within the communities, and then we pay land leases to smallholders. So we pay land leases over the 30-year lifespan of the project. So these smallholders have degraded land that has no value. They're going to receive, over the lifespan of that project, very significant income just from allowing us to be the tenant on that land to develop it. So that's ends up being, in the first 7 or 8 years of the project, in the Sierra Leone project, roughly 80% of the capex is going into those communities to provide employment, to buy seedlings. Over the lifespan of the project, a minimum of about 30% of the revenues goes, over the full 30 years, a minimum of 30% goes back into the communities. And it's important for us to do that, not just because we think that's good ESG policy, but also, we need to remove the incentive for people to be cutting down trees. We need to give them alternative income. So that's the approach in Sierra Leone. It varies country to country depending on whether the areas are occupied. In Yucatan, we're looking at mangrove areas where there's communities around them, but nobody actually living in them. So we look at employment creation there and revenue sharing with the government and with the communities. Saul, I'm seeing your question there. If you can email us directly, we'll get you a direct answer on how you gain exposure. You should be able to buy KLX shares through brokers and applications in the UK. We're a TSXV company, so you should be able to find us there under KLX. But please just email us directly, and we'll help you get set up on that if you need that. We're working on a Frankfurt cross listing as well. Now that there's sort of more activity in the German market, but we'll be able to help you find out how to get exposure from the UK. Jacob, like to know details of possible expansion opportunities to countries like Indonesia or Pakistan. We are currently exploring a project in southern Pakistan, a mangrove restoration project near the coast or on the coast of Pakistan, working with the provincial government there. So that's a jurisdiction we're quite active in. We've explored projects in Indonesia in the past. It's now become a kind of more government regulated jurisdiction. We think there's some really interesting opportunities with private land agreements, but the government's really still trying to finalize the framework for private operators like us to be active within places like Indonesia. And the reality is Indonesia has many carbon developers already operating there. We would need to be convinced we'll add a lot of value to move into Indonesia. We're more likely to explore projects in places like the Philippines, where there's been less activity historically, but certainly very interested in opportunities in Pakistan right now as a new jurisdiction. Eric, you had a question about the index we use for the ROFA. Currently, the index we're using is the Platts Carbon Index, which is a better reflection of the value of projects with a restoration component. So the NGO index is heavily weighted towards conservation projects, which have much lower prices. At the moment, we think NGO and an ecosystem marketplace are probably the two that best reflect the value of the value of Grayson asking MPV at 8% value. If we add up all of our individual projects, but without layering in, so this isn't really an earnings projection, this is a project level MPV. MPV at 8% is just over $100 million of those projects. We haven't calculated 12%, Grayson, but I've got your email and we can run that quickly for you and get back to you on that. But we run 8 and 10%, and we used 8% based on some precedents in the region, and because the projects are fairly well de-risked now with the pre-purchase, it reduces some of that risk. But we wouldn't go below 8% in terms of the discount rate for the MPV. Corey, once you plant a bunch of trees, do you get carbon credits right away, or how is it measured as the tree grows? Corey, that's a great question. So we validate the tree planting model in advance, and we get that audited by a third party. So we can see from the projections how fast the trees will grow and how much carbon we expect to produce. After 3 or 4 years, we'll come back and do what's called a verification report, which means going into the field and measuring tree height and growth rates, and then generating an estimate of the first kind of harvest of carbon credits. The best way of thinking about this is you end up, once the trees are a bit more mature, coming back every year, measuring the trees, measuring how much carbon has grown within that year, and then getting what's called a vintage or a harvest of tons. And you rely on a third party to do that verification. So when we issue the credits, it's not just us making the assertion, there's actually a third party verification that says, yes, the trees have grown and this is how big they are and this is how much carbon is issued. Those are then posted onto the Vera registry. So each ton you produce has a different serialized number. And then when somebody comes and buys those tons are retired in the name of that company. So there's a very transparent process of making sure you don't have double selling of credits, and that you've got you don't have double selling, and you've got clear ownership and transparency. Julie, any other questions on email?
There was one here. Which projects that Klimat X is running right now have the potential for creating the most carbon credits?
Probably, if you I had this question this morning actually by email, but probably if you think about it in terms of tons per hectare, it would be the mangrove project. So mangroves can build up very deep sediments, 10, 15 feet deep in some cases. If you drain the mangrove and turn it into a rice paddy, all of that sediment can be released into the carbon can be released into the atmosphere. So that could be, in some cases, 1,000 tons per hectare in the first couple of years of the project gets released into the atmosphere. So for our projects, if we protect a highly productive mangrove, we could effectively put 400 to 1,000 tons of credits per hectare in the first few years of that. They're incredibly productive ecosystems. Tropical forests typically 10 to 12 tons of sequestration per hectare per year. Much less carbon stored in the soils and sediment than mangrove projects, but also extremely productive. You're on mute, Julie.
One more question here in the chat that we have around validation and just ensuring that our credits meet the requirements set out by the Integrity Council and the other governing bodies outside, such as Vera. Can you just address that for Mr. Henson here?
So the question is how that process works.
Mhm.
So all projects issued up to the Vera registry have to be developed under a protocol that's been approved by scientific and technical teams. So it's kind of a rule book for how a project gets developed. So we work very closely with the project developers and the validation agencies to make sure that the projects are designed according to that rule book. The validation report is then validated by an independent third party to reasonable standards of assurance. So it becomes like a bit more like a reserve statement. And then each year that we issue tons, we produce a verification report that also has to be validated by a third party. And then lastly, we have a big commitment at the moment to technology platforms that give us the ability to monitor.
When can we expect an update on your project in the Yucatan?
We should have an update from the greenhouse gas measurement work in the next 3 weeks. We've spent Mexico's been a difficult place to develop carbon projects historically, and mangroves have sat in a bit of a gray area in terms of whether the state or the federal government has legal authority. So we spent a lot of time and effort working with the state government to clarify their role and their ownership in these projects. And we've had some engagement with the federal government recently, which we've already announced. I expect in the next 2 to 3 weeks we'll be able to make provide a significant update on the status of that project. But it's a very interesting, very exciting region, very interesting project. Lots of our customers want to get involved in it because it's a flagship project in a relative and easy to operate jurisdiction, and in a region where lots of these companies have business activities. Proposed EU lawmakers introduce a ban on environmental claims. I think this is more about regulating carbon neutral claims within the market rather than banning them. The SEC in the US has required that companies make clear statements about how they're going to achieve net neutral and achieve, deliver on carbon offsetting. The EU and the UK have both looked at regulating regulating these activities too. I don't think that that's a bad thing. I think it helps us because firstly, it means that companies that are listed companies or even private companies that are making these claims really have to show they have a plan to deliver on it over time. And we're all about transparency with respect to these projects. So yeah, it's an interesting change and a good one, and not surprising. Jorge, you have who are the third parties doing verification? How meaningful are the costs of these audits? There's probably the biggest verifier globally or validator is SCS Global. Many of the traditional accounting companies like KPMG have been in the space as well. The cost of a validation process is in the $100,000 to $200,000 range. So that's definitely a significant investment, and the quality is to reasonable standards of assurance. So we feel very confident when we have those statements. Jamie, you asked about solid flow of updates all summer long. Absolutely, we'll have field-based updates as we're planting in each of the jurisdictions. This may be the only week where we don't do an update for the last 4 or 5. But we expect a huge amount of activity over the summer now. So you can expect to hear from us pretty much on a weekly basis. We also share through our website where we have project level updates and videos and content from the tree planting effort. So we want to kind of bring people along with our story as we do the tree planting activity and work in the field. And yeah, absolutely, we're sort of building a lot of momentum now on each of the project sites. Grayson, the next credit sale is expected into existing Sierra Leone contract or one of the other jurisdictions. The next credit sale will probably be mangroves in Sierra Leone. They're the next most advanced projects, and we've got pre-purchase interest in those as well for the conservation mangrove projects. We expect to see that next in line. Yeah, so we will we'll be able to keep you updated on that going forwards. Jason, would more financing speed up the growth of projects? As to a degree, I mean, we are. I think the biggest impact would be on our ability to bring new projects in. Once we have a project under our belt, there's just a cost of time to the scientific work you need to do to establish the foundations for the project. And if we had $20 million on our books at the moment, I don't think our existing pipeline of projects would be moving a lot faster. Because it just takes time to get into the field and do the field work, that's important for getting the scientific foundations right. But we have neighboring jurisdictions we'd like to be able to move into quicker, and so places like Liberia, like Baluchistan, accelerating things in Suriname. It isn't so much the project finance where we can accelerate things; it's in new project discovery. In terms of Jacob's question, you're asking about when we expect to do a private placement. We're starting that discussion now. We don't have a specific timeline for doing that. We've already seen some investor interest in the projects. And again, we don't need to raise a lot of capital. Our pre-purchase agreements mean that our buyers cover the project, a lot of the project finance costs. So we're extremely efficient with our capital, and we will almost certainly do a raise sometime in the next 2 quarters, just to strengthen our ability to go into these new jurisdictions. Grayson asked, please finance via the sale of credits. Issuing equity when we're trading at 10% of NPV makes no sense. Yeah, we're certainly expecting that some of the corporate overhead is covered through these pre-purchase agreements. But ultimately, we've had a huge amount of volume of trading of our stock over the last 5 or 6 weeks. We do expect to see the price go up. It will make sense at some point for us to secure a bit more capital to be able to expand our base of projects at some stage.
Yeah.
Is there interest from strategic investors such as a credit buyer in investing? Yes, there is. Our position is we would always be cautious about taking equity or investment from somebody who's also a buyer, because it can be a poison pill. So if you've got one buyer that's seen as identified as a shareholder in the business, then every other buyer may think that that group's got a first look at all of the credits. So we need to be very careful about taking capital from any of the buyers in the space. So we remain independent, and we're able to draw a line between buyers and owners. But a number have reached out and asked if we'd be interested in it. We look very carefully at that kind of decision.